Right now I'm going to spend a few minutes talking about how pricing works in the Forex market. If you've not already done so, I advise you to pause this video and either boot up your free demo account if you already have one, or download a free FXCM free demo account so you can follow along with the lessons. There's a link just above this video on the free Forex Academy, or if you're watching this on YouTube, in the information section. By now you should have your free demo account open. If you look over at the left hand side, you should see a series of numbers with flashing red and blue lights. This is known as the dealing rates window, and it is the current price of each currency pair at this particular moment. Currency is always priced in pairs. When you look at the pair symbols, the symbol on the left is known as the base currency. The symbol on the right is known as the counter currency. When you look at the currency price, the price is the number of units for the currency on the right, the counter currency, that it takes to buy 1 unit of the currency on the left. For instance, if I were to buy the euro dollar pair, it's just under $1.49 American money to buy 1 euro. If I were to switch over and buy the dollar yen pair, it's just about 91 yen for $1. If you notice on this pair, the dollar is the base currency, whereas on the euro dollar pair, it is the counter currency. Switching over to the British pound, American dollar, looking at the price, it's just over $1.63 for of American money to buy 1 British pound. Coming down to the Swiss franc, it's 1.0184 Swiss francs to buy 1 American dollar. Coming over to the counters, the crosses. When there's two currencies that are not part of, when neither currency is the US dollar, these are known as cross currencies. Presently is 1.5169 Swiss francs to buy 1 euro. If you notice the price is suddenly jumping around a little bit, I'm actually pausing this video and filming it in small segments and splicing them together, so you may notice some sudden jumps in the prices. Switching over here, it's just over 0.9145 American dollars, so it's a little over 91 cents to buy 1 Australian dollar. Coming down here, it's just under 1.04 Canadian dollars to buy 1 US dollar. It's just under 74 cents to buy a New Zealand dollar. It's just over 0.91 British pounds to buy a euro. It's 135, just over 135.5 yen to buy a euro. It's just over 148.5 yen to buy a pound, and it's 1.66.2 Swiss francs to buy a British pound. Hopefully this starts to make some sense. That's separate from the flashing red and blue lights which you see coming on and off, which is the price going up and down from live trading. Like on all currency pairs, when you look at the euro dollar pair, you can see that it has 2 prices. On the left hand side, there is the sell price, or what's known as the bid. On the right hand side, there is the buy price, or what's known as the ask. If you've noticed, the price on the left is a little bit lower than the price on the right. The price on the left is the amount you will get if you are selling the euro dollar pair. The price on the right is the amount you will pay if you are buying the euro dollar pair. This is what's known as the bid-ask spread, or simply the spread. When a trader places an order to sell the euro dollar pair, he receives the lower amount. The broker will match him up with a buyer who pays the higher amount, and the difference between the 2 prices is what's known as the spread, and that's how the broker makes money. He keeps that. So let's break that down again. The trader selling gets $1.48 and 0.931 thousandths of a penny, but the trader buying pays a little bit more. He pays $1.48, 0.960 thousandths of a penny. The difference between the two is known as the spread. In this case is 0.00029 of a dollar, or 29 thousandths of a cent. This is the amount the broker makes, and in this particular instance, on one $10,000 lot of currency would be about $2.90 on this pair. Let's take a look at that window again. So, breaking down the window, again we have the sell price and the buy price, the bid and the ask. We have up here is displayed the spread cost, which is in pips, and down here is the dollar amount per pip. So when you calculate out for the spread, this is the last time the price was updated, the lowest price of the day, the highest price of the day, and your rollover rates. We'll cover rollover later. So that pretty much covers it for pricing, and if it's still not completely clear, at the end of this section I'm going to be doing some examples that cover everything. I'm sure by then it'll be crystal clear for you.